Today, our focus is really to kind of dive deep into kind of those recent changes that came out in the 2026 requirements manual at the end of March. But I like to kind of get started before we kind of dive into those kind of places. I want to talk a little bit and kind of acknowledge the difference that the accreditation process and program has made, and really all of you and those 480 accredited land trusts. We are celebrating our 20th anniversary this month of the founding of the commission, and it's really amazing to me kind of the change in that community that has happened during that time frame. And for me, being accredited is something to continuously celebrate because it is that continual commitment to the standards and to excellence. And so, speaking of the standards, before we get into the weeds of some of those changes, I wanted to make sure we have all of that same grounding of kind of what the standards are and what the requirements are, knowing that you're all coming from different places across the country, different lengths of term of kind of coming into the requirements and work at your land trust. So accreditation really at the core is to be able to recognize conformance to a standard. Lots of industries have accreditation. There's universities, hospitals, zoos, aquariums, just to name a few. And for you all at the Land Trust community, the standards are the 2017 Land Trust Standards of Practices. And really, those standards are the ethical and technical guidelines for the responsible operation of a land trust. That's what that official tagline is for you all. And so what we do is there's a lot of standards and practices, and we use a sample of the practice elements from those standards. Those are called the indicator elements. Those, and then the requirements are how we at the commission verify those indicator elements. And the application and the documentations you provide show, and that's how we evaluate that you are meeting those requirements. So what we do is we take something like annual monitoring of conservation easements and annual inspection of conservation fee properties, which are in practice elements 11C2 and 12C2, and break it into the individual components of what we evaluate for inspections and monitoring. And that's what those requirements are. Accreditation, we don't want it to be this black box of mystery. We try to be as clear as we possibly can what we're looking for. So you can see here, we're looking to see that someone is monitoring and inspecting once a year, and those specific things that we're looking for in those inspection reports. And accreditation, we organize the requirements and documentation into 4 sections: governance, finance, transactions, and stewardship. And it really helps to show we're not looking at isolated little pieces about what a land trust works in doing, but they really connect together to be able to show how a land trust has responsible governance, sound finances, solid transactions, and lasting stewardship. And when it comes to creating or revising the requirements, the commission, what it does is we use a set of criteria. The manual has been around since 2012, and we do review it annually to see if changes need to be made. And that could be things that are happening in the external world, the legal context, what we're hearing from land trusts in types of questions. So we had a major restructuring in the requirements to align with the 2017 standards in 2018. And since then, we've had 3 updates. So 2021, 2023, and now here in 2026. And in this most recent review and revision, we had kind of 2 major opportunities for feedback. But that's not to say we collect feedback all the time from things that we hear during application reviews. We have commissioners who are our board members who are actively listening. All of you, they're out there doing the practice of land trust work, and they come and they say, hey, this isn't quite clear. We're not quite sure what this means in terms of this requirement, or hey, here's a new thing that's happening in the land trust community that the requirements need to respond to. But we did have an open call for comments, and then we went back out to the community and said, here's what we heard, here's specific changes that we're going to be making. What are your comments on these changes? And we really thank any and all of you who provided feedback on that and said, yes, we're not quite sure about this. Yes, we do agree with this change, or we have questions about that. It truly, really does make a difference. And each one of the requirements that we're going to talk about or the changes that were made really were stronger because of those comments. We can think we're being as clear as possible, but little words, a tweak here and there actually makes it better and stronger in the end of the day. So before we kind of get kind of launched, we want to just make sure that you're all aware of what resources are available for land trusts. I'll make sure kind of Valerie kind of jumps in there and drops in kind of some of those links, so you know how to get to our resources if you haven't kind of actively been kind of highlighting and marking up your copy of your requirements manual like I do. And it really is kind of, we want to make sure we have kind of the materials and packages of things that we're talking about as kind of, we have the revised requirements manual. We have a track changes that really redlines and shows each one of the differences that were made since the last edition. So if you really want to carefully follow along and say, okay, what were the exact changes that were made, you can do that in the track changes version. We have a summary of changes to explain what were the feedback, how did we get to the requirement, and to be able to give you links to those resources that are on the Resource Center to say, oh, okay, well, I really want to make sure I have a sample of this. Here's a sample. Or I want to make sure I understand what the background for this is. That's all that materials are on the Land Trust Alliance Resource Center. And I'll just say, really, as of note, most requirements have not changed. Really, what most of the changes are in here, is really in that spirit of continuous improvement. We kind of revise or tweak language from questions from you all that says, well, what do you mean by the end of the year? Or what point of the year are you talking about? And so some of those changes and some of those definitions and clarifications that you'll see in that red line version of things are really because of those questions that have come up from the community. And so in the future, just to let you all know, we'll make sure that, all of our other materials, and we'll come back to this, are going to kind of track and align as we go forward, kind of making sure kind of the application versions, our internal accreditation management systems, all track and align with these changes. It takes a little bit of time to make all those things happen. But because we do phase in the documentation, and if something is a new or slightly changed requirement, we phase that in. So if you're a 2026 applicant, you're in the process now, you have an accreditation application coming up in a couple of weeks, there's nothing new you have to do right now. There's no immediate action that you have to take. If you're applying in 2027 or beyond, that's where you need to really be thinking about, okay, how do I make sure that my documentation is aligning with any of those changes that have to be in the requirement? We'll come back to that, but I just know that that's a common question we get, like, oh my gosh, what does this mean for me? And when I'm applying. So I just wanted to say that up front, and we'll come back again at the end to make sure everyone has that clear understanding. So let's dive into kind of some of the details. I'll say in the governance section, there really were no major changes. We did change a few things just to kind of that clarity and be able to make sure that we are as clear as possible in kind of what those requirements and some of those definitions are. And one of those clarity points was to really be clear that when it comes to the annual evaluation of this chief staff person, that really should be annual. We just said evaluation, but when you go back to the practice element, it says at least annual. So we just felt that we needed to be really clear in the requirement itself that is expected to be at least annual, that is happening. So I'm going to go through a bunch of finance things, then we'll stop for some questions. And again, Valerie, really appreciate that she's kind of tracking along with what's happening in the question and answer field. She may be chiming in with a couple answers, but we'll make sure we raise any of those up to be able to talk through. So again, we made some minor changes to kind of clarify definitions and clarify terms. The four kind of major changes that we'll go through today have to do with requirements related to the operating reserves, donor restrictions, internal controls, and insurance. So diving in. So the first requirement that kind of had some more major changes is under the financial records and financial health section about an operating reserve. So I will say the operating reserve level, which is kind of having that 3 months of operating expenses, has not changed. That has been kind of the standard for the requirement. But it is just trying to add some of that language to really clarify around that. So some of the major clarifications that we made in here is what is the basis for calculating the level of operating reserve? We got kind of questions like, okay, well, what point of the year are you actually looking at and how are you calculating this? What data are you using? And we just want to be really clear that we're looking at this as kind of a metric that is at the organization's last fiscal year. And it's based on that, the operating expenses for that year. So it's kind of at the end of your fiscal year, kind of what were your operating kind of reserves, what were your operating expenses. And we do that using the organization's financial statements. That's either their audited, reviewed, or compiled financial statements. We also clarified in the definition of what kind of counts towards an operating reserves, what assets and net assets count towards that. And we did really want to make clear that kind of net assets with perpetual restrictions, again, these are those funds that an organization has that it can take the earnings off of them, but has no ability to kind of touch that principal of that fund. That because those funds aren't, the principal of those funds aren't actually available for operations, those are not something that we would count towards an operating reserve. 100%, all the funds that an organization has that are time and purpose, kind of that can be used for operating expenses, there other, and if that perpetual endowment is kind of spinning off interest, that can be used. It's just that principle of that fund. So what happens if an organization doesn't quite meet that metric? We allow a plan. So that is part of, if the organization does not have the full amount, what do we do? A feasible plan with specific funding targets, fundraising methods, and timelines exist. So that again is trying to be a little bit clearer about what the expectation is in that plan and that those funds would be expected to be raised over that kind of accredited term. So before that organization comes in for next renewal, we'll be asking to say, okay, well, how did you do on that plan? And we'd be expecting you to have that 3 months of operating reserves. I'll say we got lots of feedback during the process that people were like, oh, 3 months, that's not enough. Totally appreciate that. But it really is trying to say what is that kind of national standard, understanding organizations really may want a lot more than that for their own purposes. We're not asking for new information in the application. The application does not have to change around this. We get the information currently how to evaluate this. But I will say, right, sometimes we understand land trusts sometimes have weird years. Something may happen where you have this extraordinary operating expense that is really outside of the normal of what your operating expenses are. Or maybe there's just some anomaly in your financial position that year. And really, for some reason that year, like every other year, you'd be above the 3 month metric, but that year that happens to be right before the application, somehow that always happens. There's something a little odd. There's an opportunity in the application to provide more information and to provide that as an explanation. Okay. So moving on to the next kind of change has to do with gift acknowledgements and donor restrictions. Again, here's another place where that basis of the requirement has not changed. Information, we're looking to say that those donors and grantors have to have accurate information about how their contributions will be used, and you need to honor those donors in donor restrictions. We expect you to classify, track, and use those contributions appropriately based on how you're communicating them. Land trusts really need to avoid language that can be misunderstood and to really be clear in how you are soliciting. So what we did, again, this is not a change requirement, but we're trying to be a lot clearer in how the commission evaluates that. How do we evaluate those solicitations? So we're being clear again that it's the communication, it's that early request, it's those written documents and the communications that set the expectation about how those funds will be used. And if it's not in the upfront solicitation materials, then that could also, and that's kind of the first place we look. And if it's not in there, then we kind of are also looking at kind of how those gifts are acknowledged as well. So that's when we say those donor grantors materials or communications. We're looking at that kind of as that full package of information. And we'll go through a couple examples because I think that that might help illuminate what some of those differences are. And I'll say this requirement, this revised requirement also is trying to really distinguish and parse out kind of those net assets with perpetual restrictions, where again, you're communicating to that donor that that principal, that main part, that corpus of that fund can't be used and you're just using the earnings. Those are kind of donor restrictions, perpetual restrictions. And really thinking on when an organization is using that word endowment does mean perpetual restrictions. Unless you're making clear somewhere else in those communications that those principles can be spent. So again, we'll come back to an example on that. And again, we're really looking at this as that external facing language. I know some land trusts use kind of internal fund language that maybe it's kind of in their board reports. It's like their quasi endowment. That's not what we're talking about here. This is again, what you're talking about externally with donors. And again, we're already getting all the information we need about this. There's no different documentation that you need to provide during the application. This is really just about the documentation and how we evaluate it. So I get a lot of questions and we see a lot of questions kind of from land trusts like, okay, what does that really mean and how does that work? So I wanted to run through a couple examples and these are, anonymized, but these are very similar language to actually what we've seen in applicants. So I didn't just make these up. These are kind of true life stories of how we see people being able to kind of solicit those funds. So kind of in this first example, the land trust is soliciting and says, we have a stewardship and an endowment for the purposes of monitoring and maintaining the Smith conservation easement. The endowment's invested, the principal will not be expended. So when you see solicitations like this and they're asking for a gift under this example, what we would expect to see on the commission side is, okay, they have asked for endowment for the Smith conservation easement, and they're being really clear that that principal cannot be expended. So we'd look to see kind of one fund that is restricted for the Smith conservation easement that has perpetual donor restrictions in this example one. Now let's change some of those words just a little bit. And the point here is that the words really truly matter. So in example 2, same thing, right? They're talking about we have a stewardship and endowment for the Smith conservation easement. But here in this next sentence, the land trust is being really clear. Hey, look, we're intending this to provide ongoing support, but they're also being really clear that the principal can be spent. So that's where that as appropriate aspect of kind of the requirement about the perpetual restrictions come into place. So again, we're not giving legal or tax advice here, but as a reviewer, we would look to see that an organization using this solicitation would have a fund for the Smith conservation easement. Again, the words here say they're just using it for that conservation easement. But here, because that principal can be spent and they're being really clear about that to the donor, here's we'd be looking for it has with donor restrictions, but their time and purpose because that principal can be spent. So again, these words here matter and then what that outcome is because these are the communications to the donor. Going to go a little bit, kind of a little bit simpler examples, but kind of similar things because a lot of land trusts don't go into that really depth of, okay, here's all the ways that we're going to start using the funds. So here's another example of a land trust. So they would say, we request a $20,000 gift for the stewardship endowment and a $15,000 gift for our defense fund. So again, here, there's no property specific requirements, but we would look and say, okay, well, here they're using a stewardship endowment and a legal defense fund. So we'd expect them to sort of have two accounting pools of money. One, that the stewardship fund would be with donor restrictions that are perpetual. And the defense, because it's not described as an endowment, would be a time and purpose restriction. And again, when I say kind of funds or pools of money, I'm not saying these have to be in like completely separate bank accounts. Lots of land trusts do that, but I will say it's really about the accounting and what you can be able to show on your financial statements that these kind of two pools of money have different restrictions and you're kind of tracking those separately in your financial statements and financial records. We go on to example 4. Here, this organization is saying, well, we request a $25,000 kind of gift for our Stewardship and Defense Fund. Okay, again, here, one fund that is for stewardship and defense purposes, not separate. They're kind of thinking it as one fund. But again, there's time and purpose. There is a donor restriction that these monies are for the purpose of stewardship and defense. Again, no property specific restrictions here in this example, number 4. Okay, one step further, because again, this is the full spectrum of what we see kind of during applications reviews, so it's worth stopping here and going through them, is that, in this second one, we request a gift of $25,000 to support the Land Trust in its ongoing mission to protect and steward special places in our county. Here, this is a solicitation for general funds. It's really for anything in the organization's mission to support the Land Trust. So we would say those don't have donor restrictions. And really here, then the board, so these would be classified as without donor restrictions, but the board then can designate those for stewardship and defense. And that's sort of the full spectrum of kind of how we see different land trusts, sort of soliciting and looking at different components of that, but it all goes back to however you're soliciting it and kind of acknowledging it, that is how we expect kind of to see that. So I'm just going to go quickly, how do we expect to see that? We evaluate that kind of using the Land Trust's financial statements and financial reports to confirm that those restrictions are being classified and tracked appropriately. So again, this ties to a requirement that we're not talking about today about the financial report contents. That requirement has not changed, but it's really kind of worth calling back here because those tie together, right? So this is not little pieces that we look at, it's the financial package of an organization as a whole. So for here, when we're looking at how the organization is kind of soliciting those funds, classifying and tracking them, we're going to be looking on their balance sheet, their net asset position, not the top line current assets, the net asset at the bottom section, about how they're presenting that to say, do they have, what's their portfolio without donor restrictions, what's board designated, and what's with donor restrictions. Then on the second piece of that has to do with how the organization is showing that they're receiving and releasing donor restricted funds. Again, you receive stewardship funds for, $25,000. Those aren't available for operations, especially, those purposed kind of function. They're not available for operations until you've expended that and then you've released that. So that goes to this kind of second component of that requirement where we're looking to say, okay, shows that you received it. So here, $10,000 they received, but they had also release of $3,750 of, because they've spent the money. They either had stewardship time or they had another stewardship expense that would count. And again, those $10,000, that's not income you can use, but you can use that $3,700 because you've released that. So you're going to show that up top. So again, I could probably spend a whole day, and I know there's separate webinars about financial reports, but I just it was worth touching on because I think just to say how that kind of solicitation, how you're bringing in those monies, those financial reports, they all tie together. And I think that's true of a lot of the requirements. They all tie together and nest within each other to be able to say you have sound finances. And we will stop for some questions about finances at the end, and I'm happy to pop back. We are recording this, so you can come back to this webinar at any time. So the next section that we kind of had more of a major change has to do with internal controls. This is a place where in the past, the application, and I've seen sure some of you have filled out this section of the application and maybe scratched your head a little bit. We did request an assessment about, so a land trust to do a self-assessment of kind of risks related to theft, fraud, misstatement, and then, okay, well, what are your procedures to kind of back up and kind of identify how to address those risks? And I think many organizations really struggled with that and gave us lots of feedback over the years that really that's confusing. We're not really understand. Can you just please tell us what you want? And so then we can create internal controls around that. And so that's what we've done with this requirement. We have split it into two components. So one, it's a bold requirement. So that means we have the bold, non-bold about kind of the highest risk areas. So here, the bold, everyone has to be able to give us written internal controls and counting procedures. And now we have a new requirement, number two, that includes what those in controls and accounting procedures have to address. So that's that specificity that Land Trust were asking us to provide, to say, well, what are the outcomes? What do we really need to address in those? Again, this is not bold because there is no one prescribed format. There's no one prescribed internal controls. We really understand that the scale, scope, size of your organization is going to make a difference in what those internal controls do. But you have to kind of build that to say, well, what are your measures to be able to prevent or detect fraud when you're having money kind of in and money out? What are you doing to kind of the measures to ensure that the receipt and use of your donor contributions are properly accounted for? And how are you monitoring that those controls are in place? Again, that's going to look different in the number of people and who's doing that and what are the steps being taken. Those are all going to be kind of different. But really, this comes out of kind of the framework that is for accounting professionals and as well as the Alliance's guidance on this topic. So what's going to happen in the application is you won't have to do, starting in 2027, you won't have to do that risk assessment questionnaire. Instead, we will say you need to give us kind of your internal controls and counting procedures. I think that will be a lot easier for all of you just to say, let me upload a document as opposed to trying to create this document for kind of accreditation purposes if you've already done all of that assessment and risk and built it into your internal controls and procedures. Again, this is one of those requirements we are phasing in. So if you're thinking about and you're planning and how on schedule to apply in 2027 or later, this is that approach that is going to be taken. And we just want to make sure organizations have that time to take a look at their procedures and say, oh, can I check all the boxes that it covers all of these things? So that's that place where we're really phasing in the documentation and the requirement itself. Okay. Another place that the requirements have kind of changed, I think, really to address feedback that we had gotten from Land Trust over a period of years, is really, I think, since we first published the requirement about insurance, there was confusion about, when we asked for, okay, well, evaluate your insurance needs. Like people are like, well, who has to do that? I don't really understand. What do I have to cover? And at this point, we've gone through a whole full cycle, and I think that evaluation, the commission is, strongly supports that evaluation. That is extraordinarily valuable work. I know I do it every year to say, hey, do we have enough insurance? Is this the right coverage? What's changed? What's that landscape change? So we're 100% still do that evaluation, but at this point, we've kind of gone through everyone doing that evaluation and that cycle of all accredited land trusts have had to do that. And we're really shifting the requirement now to be something that more closely mirrors the exact language that is in the indicator element, where an organization, we're going to confirm that you're carrying kind of general liability insurance. That's the biggest risk. And then we'll look to see and have an organization answer, do they carry directors and officers liability insurance and property insurance? And as long as the organization has that, we can say the requirement is met. If an organization doesn't have those, that's where we're going to ask about that risk assessment and say, okay, if you don't have those, how did you make that decision that that is not something that needs to be carried by your organization? And again, some of that comes from you've already done all that risk assessment. And so you should be able to answer that. Okay, that was a lot on finance. So Valerie, I'm going to say to you, what questions have would you like to clarify or strengthen or put a pin on anything that come back to anything that I said? And then what questions do we have?
Well, a couple of things. I don't need to come back to anything, but Elizabeth has had her hand up, Elizabeth Sorensen. And Elizabeth, I don't know if you have a question. Um, and I am a novice at this, so I haven't been able to come up with a way to post the links to the resources, but Um, Elizabeth, do you want to put something in the chat? Um, I'm not seeing a way that I can unmute you.
I just want you to know that the chat is closed for comments right now. It needs to be open.
Yes, we tried to open it. We've been working on that, and unfortunately, it is only allowing us to do that with the smaller, just with the other presenters. So I'm I apologize for that. We did not realize, again, we're novices here, and so we didn't realize that that was going to be a problem. Um, Thanks, though, for letting us know. I'm kind of struggling with how to post resources for all of you. Um, and let's see here. And we did have a question, Melissa, that maybe you can talk about. It's what's the schedule for future updates for the requirements manual? Like how often does that happen? Is it every 3 to 5 years? Is it maybe you could just talk about how that works?
Yeah, thanks, Valerie. And again, apologize for our technical as we kind of figure this out again. If people can keep chiming in into that Q&A section, we'll make sure that we are following that and make sure that we get any of those questions answered. And we'll talk live through as we go through those so everyone can see them and answer, be benefit by them. So I will say the cycle, so again, we look at it every year. We kind of take a stock and say, hey, what are we hearing? What's working? We're kind of always collecting that feedback. But we also want to make sure that the changes and the changes that we're making, really make a difference kind of and really matter and address those areas of risk. So while we look at it every year, we really think about what are those changes? How essential are they to happen right this minute? Or can they wait a year as we collect more information about the landscape that's changing? So I'd say, I think that, right now we're sort of on a every other year, every 3 year cycle. But I don't kind of want to commit to saying that's exactly what it's always going to be. We are always transparent about when we're really starting to actively be soliciting feedback to say, hey, we're thinking about going into a requirements revision process. We're really actively collecting feedback. Where do you have concerns? Where do you have questions about things that might need to be addressed? And the same thing when we actually have specific changes to be made, that's where we go back out to the community and say, hey, here's the changes we're proposing. What are your comments, questions, suggestions on those to try and give organizations that advance notice? So, I think in this process, we've probably been looking at and working on the 2026 edition probably for 12 to 8, at least probably 18 months to go through that feedback cycle and make sure that we're having kind of all the resources aligned up in that background. But Valerie, would you add anything to that answer?
No, I think that that's the timing. It's just trying to stay on top of it and make sure that we've got that we're taking into consideration all those things. So um we have a couple more questions, Melissa. One has to do with operating reserves and the fact that it's based on the audit, but the audit takes into account all revenues and expenses that go beyond the operating budget. Um, so it's just kind of clarifying when we're looking at the audit, are we looking at everything or just what's considered operating?
Making sure I'm coming off mute appropriately there. So thanks for the second. So I'd say we are looking at kind of those operating expenses. So don't mean to make anyone kind of a little dizzy with clicking slides, but I'm gonna go back just to make sure we're all looking at that same requirement. So, and again, I think to be, so this is kind of that base requirement, and I think we are really looking at what is those operating expenses. So, if an organization has expenses that has to do with kind of those capital expenses, or it has to do with, the purchasing of a property or the purchasing of kind of a conservation easement, those are things that we would not necessarily, that we would kind of factor out as an operating expense.
Renee, I don't know if that helps or if you need more. And then one other question is, what if you, as a general rule, are rolling in a percentage of operational support into restricted asks? Does that need to be delineated to donors? So what I think this is saying is, sometimes when you submit a grant, there's a portion of the grant that might be used for sort of those overhead costs. And does that need to be reported to whoever the potential donor or grantor is?
So I think that's where it all goes to the communications aspects, right? Are you being clear, that X% or, $10,000 goes to operating expenses? Then I think that is clear that the $10,000 goes to operating expenses versus $10,000 goes to our stewardship fund. Then that is a time and purpose, right? So I think it is really about, if you're being really clear that these are for operating expenses, then that's not necessarily, a purpose restriction, because that is for your whole organization and your whole organization's operations. Valerie, did you want to add anything to that?
No, I think that's basically what I would have said. It's about that communication, and it's being upfront, it's being honest, so that folks, whoever is giving the money, knows, yes, part of those funds are going to go to, do the paperwork, if you will, that's part of all this. We have one more question that I know I can't answer. Are designated lines in QuickBooks sufficient to track a dedicated account? And we are not QuickBooks experts. But do you have something else, Melissa, that you would add to that?
No, I mean, I think it's the outputs, right? So I think you have to have good inputs in, and then it's kind of the outputs of how then you're able to kind of manipulate kind of the QuickBook outputs to be able to get to the outcome that you're tracking, kind of those net assets in those categories. And I think what's interesting is there is no one universal system that I see Land Trust using for financial reports. When I look at organizations, organizations across the country use really different formats for their financial reports. Some of it's because the board wants the information in a certain way. And the requirements try to be flexible enough. And I know these are really simple reports as the example. Trying to give really complicated reports is too much for a webinar slide. So I think it's more about, how do you then do the presentation that is able to kind of take that information and put it out that you're getting net assets and those kind of restricted monies in received and released. But we are not QuickBooks experts, or we don't recommend any specific platform for any specific purpose. So I'm going to keep us going. And I'll say, this is a lot, and there's always a lot of information. So I think the intention of this is just to kind of be sparking your brain and to have you start thinking about these requirements. And then we're happy to answer questions. We'll give a kind of a contact slide later, but just wanted to be, clear, we are happy to kind of answer questions. I know Land Trust have okay, well, my special circumstances, and that is what we're here for, to be that support. So I'd say in the transaction section, moving us along through the requirements manual, we did include some clarity around kind of title encumbrances, kind of some of the wording around that, as well as visual inspections and paying appraised value, just trying to be clear about those expectations. But there are two major changes related to tax deductions to have on your radar. Number one is that the practice element 10A1 does require Land Trust to inform potential donors about really specific aspects about when there's related to a potential tax deduction. And that includes a statement that they are not providing individualized legal and tax advice. Historically, the commission has just looked for the outcome to say, hey, as we're looking at all the land trust information, things that they're providing to donors, let's just make sure they're not providing individualized tax advice. However, kind of looking at the landscape of the world that has changed today, particularly related to kind of how the IRS is thinking about things, how they're thinking about listed transactions, um, we added the element into your notification elements that your notification elements should include a statement that you are not providing legal or tax advice. So that is in the practice. It's just new to the accreditation requirements. I'll say a lot of your statements and a lot of your notifications already include this, but it is worth a check. But because this is a new requirement, we are phasing that in. So again, starting in 2027 to give those organizations time to be like, oh, let me check my notification. Does it include this statement? Now is a good time to do that. But you won't need to provide any different documentation in the application because we already ask for this information. So the next major change, and it's a lot in the red line when you look at the red line, wow, they got rid of a big thing. And that's because the Integrity Act now disallows charitable deductions under specific circumstances. So those specific circumstances and the laws now kind of supersede some of what's in the Alliance's tax shelter advisory. That was in place saying land trusts shouldn't participate in these types of transactions. Now the law says land trusts, there's no tax deduction for landowners who are trying to get these types of transactions. So what the Alliance did was suspend that practice element 10C4 because it is superseded by that law. So we got rid of kind of because there are no more kind of references. You try and click on the tax shelter advisory. It doesn't take you anywhere. It just takes you to a place that says, hey, this practice is suspended. Look at these other things. So we took a look at the requirement, and instead of that being a standalone requirement, it is now nested in the expectation that a land trust does due diligence to avoid participating in transactions of concern. If the government has kind of concerns that they shouldn't be getting tax deductions for these overinflated syndicated transaction deals, that should be a concern for land trusts. So what we say in this requirement is that when an organization has indicators of concern, such as like with the appraisal, the appraised value, then the land trust needs to show that it has taken action. And if it's a transaction with a pass-through entities of unrelated parties, then you have to really show that you kind of were satisfied that it wasn't a disallowed contribution, either because it was before under the 2026 through 2022 prohibited by standards or prohibited under law. So that's this new section D that is part of that requirement about doing your due diligence and taking steps to avoid that participation. And again, there's lots of words in that kind of small font. And what we're really trying to say is the expectations for a land trust are based on what was in place at the time. So look at the year, say, and most of the time you're looking at transactions that are kind of now in 2026. We're going to be looking that you're thinking about it through that lens of the Charitable Conservation Easement Program and Integrity Act. But we wanted to make sure that land trust understood that the past still mattered, that organizations who have participated that were thinking about participating in these in the past, they had obligations at that time as well. And same, in general, the application does include sufficient documentation around this area. And again, most land trusts, this doesn't really apply to them. It is for a very small number of organizations. But we did make some modifications just to be able to kind of get the information at the right time and in the right place for this application. So again, this is most of you're just going to be able to say, no, I don't do these transactions. But there is for those organizations who, had kind of possibly been thinking about these or had been seeing these as areas and what the due diligence they did, you'll see different parts of the application associated with that. And it's just more moved kind of where in the application that is. I'm going to stop there, Valerie. Was there anything? I'm not seeing anything in the Q&A section, but I'll stop. Is there anything?
We have not gotten any further questions, so we can go into the home stretch.
I know. Is there anything else you wanted to add to what I said in that section?
I think just, to make sure folks know time is going to pass at some point. All of the transactions will be 2022 and later, but for now, this is sort of a bridge to get us to that point.
Thank you. That is actually a very helpful clarification. And that's a place where we're paying attention so that we can think about what that future requirements manual looks like to say, okay, you know what, now it's time, the bridge has passed. We can just be focusing on the 2022. We don't need to have in kind of those 2026 rules as well. So in the stewardship, we'll kind of bring us home with this last section. We did kind of, again, clarify terminology about management ownership problems rather than just ownership challenges. People got kind of tripped up on that because we now define that kind of as encroachment or trespass, try to be a little bit more broad about that kind of definition because that's how we're reviewing those things. And that really is to be consistent with the Alliance language and reduce some of that confusion. But we did have major changes kind of around monitoring easements and inspecting fee properties that it kind of came through that kind of questions that we've seen kind of from the community. So two clarifications kind of into what is required in a monitoring and inspection report. Now it is really kind of trying to be really clear about what additional information is essential to document when it is a remote inspection or monitoring event, because we want to increase that likelihood that the reports are going to be admissible as an evidentiary evidence in court under those business record rules. So we got lots of people who said like, oh, well, it's a remote monitoring. Like, what's actually the monitoring kind of date? And people got kind of all tripped up on what were the dates that we were looking at around. And so we tried to be really clear in this note that, look, when we're looking at a remote inspection, understanding those methodologies may be expanding across this country. We're looking to say that the reports include that the date that the image was captured, where that image is from, and either kind of you have a copy of that image in the report, like a little screenshot, or you tell us where that image is. We've seen organizations who thought they had access to the image, but then their vendor kind of cuts the contract or is no longer in business. And so then they were not able to actually get to the images and just really had mostly blank reports that just said, oh, we did aerial imaging without that backup to be able to say, okay, well, this is what the quality was versus having it in the report or kind of what their permanent storage location was of that. And again, the other aspect that we kind of really thought about and kind of clarified in here is that if there's photos taken during a monitoring inspection, people are out there taking lots of really great photos of properties and just kind of documenting those conditions. But particularly when those photos are related to violations or those management or ownerships problems, those photos are essential to building that data and kind of that record that you have to be able to kind of enforce or uphold your properties. So it's really important that those records, whether related to the violations or challenges, be maintained as a business record. So that's where we're again saying if those photos have to relate to those things, you have to either include the photos in those reports or you need to say in that report where those reports are located. Again, creating that continuity business record so you can go into court and say, well, here's the photos that we were actually talking about, or here's what the copies of the photos actually looked like. Again, no change. We're already getting copies of organizations monitoring inspection reports, but again, phased in to really make sure organizations are thinking about these elements in those reports going forward. So that's where you're going to see that those requirements are going to be starting in 2027. We're not expecting you to go back. It's really about that future looking aspect of those reports. So this is a place where the requirements are actually changed or clarified. I'll say it's a clarification of the requirement because of you all. You all have been asking and really kind of came up clearly during that comment period where we were asking for feedback on kind of the changes we were suggesting. Is that there was a lot of requests to say we need clarity. We need to really understand kind of what you looking for that date of the kind of the report, the date of that image, and kind of when we review it. There's kind of 3 dates. Like you get the date, you like look at the image, and you create the report, right? 3 dates. How do you reconcile that with kind of a timely report requirement? So we did add, and we understand there can be a gap, right? The day that the image is taken, it may take some time before you actually get the image. And, we understand it's not an instantaneous process. And some organizations want to kind of batch all their looking at images in that. So we kind of looked at what the kind of information was out there in the community and added a clarification that makes clear that the commission is expecting kind of when the image is taken and when you're looking at that image is really generally in that same calendar year. And if they're not, what that puts at risk is that you could not, if you're looking at those at different times, different years, it could mean that there might be no observations for the year, right? You think there's an image, or you think the image quality is going to be good enough, but then you go and you say, oh my gosh, it's completely cloud covered. I don't have an image for this property. I didn't take it. And that could mean that you missed that year. And I would say that the other aspect of it is that because the date of the image, the day the image is taken, is actually really when you're looking at that property. So if you're looking at a property today in 2026, that's an image of 2023, you're actually looking at the condition of the property in 2023, not just because you're looking at it in 2026. And if that gap is too long, that could jeopardize you taking timely action, or it could jeopardize, a possibility of a terra firma claim, insurance claim, and kind of timely notification. So again, I think just to point out, go through a couple examples. I know this kind of sounds vague in the abstract of things. I would say really this is also talking about the organization's systems for using remote and aerial images. And we really do encourage a land trust who is thinking about this to really create a procedure to be able to address these issues, to think about what their system is for how are they making sure that those images are the right scale and the right quantity, that they are the right image type for that property, and what needs to be monitored in those types of things. And I'll say before I get into the application, again, we're not changing anything. There's no new documentation. We get those reports that include these dates. We're just trying to be really clear for land trusts. So just a couple quick kind of examples, because I think, again, this is one of those places where, a few examples are helpful. So let's say a land trust has an image that is from March of 2026, and you look at it in August of 2026. It's acceptable, right? That's the same calendar year. And if you find out that the image is not sufficient or somehow it was missed, you can still go out there and inspect that property kind of in that 2026 timeframe. But let's say you're reviewing a March 2025 image in March 2026. That's not meeting the requirement for a timely report because they're in different calendar years. And that's where you're risking 2025 not happening. Or if something happens and you look at that 2025 image in 2026, you're like, oh, there's something on here. I needed to take action, and you're risking timely action. Again, that possibility of putting a terra firma insurance claim under jeopardy. So third example, and again, I appreciate people have reached out ahead of this kind of meeting and have asked some questions. So some of you might recognize like, oh, I asked that question. So I appreciate that because that helped us give you all good examples for this conversation. So another example, right? So let's say a land trust, monitors, they have kind of that spring monitoring season. They monitor in May of 2024 in person, then they're kind of every other year. Now they're in May 2025. They're using, like, sit down, look at the image, but it happens to be a late 2024 image, right? That's what's available. So like, okay, I'm going to use my, October 2024 image, check, move on. And then you go back out and you kind of go back out and it's May 2026. That's your next visit, is the next May. So while you're like, okay, I did something in May of every year, that doesn't meet the requirement because no visit in there actually represents what was happening in 2025. So you're really having this, fall of 2024 to May of 2026. That's your gap in coverage of what is happening on that property. So it's really not, it's somewhat about the gap, but it is also about that outcome of actually having annual inspections and monitoring visits. So I'm just going to keep us going really quick, and then we'll have just a few minutes at the end for question. But again, welcome people to reach out at any time with questions for us. So again, for those of you who are kind of thinking about those 2027 applications, like I said, there's a couple places where we have made some modifications. So please do go to our website. We have all of this materials in terms of the reference application packet. We kind of have updated the land conservation project list to be able to kind of take some of those advisory transactions that took up a lot of space that didn't apply to most organizations, and now that is built into the pre-application stage of things. And this allows organizations to collect information over their extended term of 7 years for all those who are in that camp. We've also kind of included some new kind of robust instructions for that land conservation project list. And it's based on the questions you all ask us, how to be clear about some of those items, as well as trying to update that schedule with dedicated and restricted funds. So again, trying to make sure that all of our tools and our application documentation align with those changes in the requirements manual. And I'll just say, again, I want to make sure that, to be clear, again, the changes in the requirements and documentation, as we've talked about, are really phased in. So again, if you're applying in 2026, either you're in process right this second, or you've got an application coming up in a later round, you don't have to do anything right now. You absolutely can. You can start like, let me go look at my notification. Yes, please do that. But that is not something you're going to be kind of evaluated during that accreditation process. That will come at your next application. So better to do it now while it's fresh. I will say kind of 2027 and forward, again, that's where we're looking those modest changes we've made to the application and kind of those requirements you'll be kind of looked at through that lens and given opportunities. If you haven't taken action to fix those things, you'll be asked to do so during the accreditation process. So it's always easier to do that ahead of time. So to kind of take a look at that now. I will say, first of all, thank you all for spending an hour of your day. I know your schedules are super busy, and apologies for not having a really detailed ability to chat. We were tracking questions in kind of the answer section, but please reach out to us. We have kind of contact information there, but I do appreciate everyone's time today, but I will give us just a minute or two, Valerie, and see in her last minute, did I miss any? Are there other questions that people are having?
You know, I've answered a couple, just reminding people, and I did post under some of the questions, so it's in the answered section. I posted the link to the resources on the website, but if you just go to our website, landtrustaccreditation.org, and you type in under the search, you're looking for the requirements manual, you're going to get that whole resource of here's what the new manual looks like, here's the track changes version, and then also that summary of changes that has really good links to the Alliance resources. So that's all there available to you. And as Melissa said, you can contact the commission if you've got some specific questions as well.
Well, I know we're at the end of our hour, but I do see a couple questions in here, so I'm happy to kind of stay on just for a few minutes, but I appreciate that all of you have things to jump to. Again, appreciate your time today, but I will take a couple of these questions just out loud in there just to make sure that we have that, but feel free to drop off if you can. I see a question from Lisa in here about the net operating reserves, and is that required to be shown on the board financial reports? I'll say it doesn't have to be like a specific fund that says like this is our operating reserve. Again, we're looking at an organization's kind of net asset position and what of those resources are available for operations. So that could be, hey, we have unrestricted cash that we can have as for for operations, has no donor restrictions. It's kind of that we would count those things. So again, we're not asking for a specific operating reserve account. We're looking at kind of what assets are actually available for operations along the way. Understanding some organizations do have an operating reserve, but that is not how we are measuring that specifically. I'm just looking through. Okay. Oh, thanks, Maggie, for appreciating that our chat was disabled. It wasn't distracting. Thank you. Thanks for pitching in there. I'm just going to go back. David, if you wanted a mailed version, I think if you're asking for kind of a mailed version of the
For the
requirements.